Most people think being poor is about how much money you make. But in America, that's often not true. There are people earning six figures who are drowning in debt, stressed every month, and living paycheck to paycheck. And there are ordinary people with average salaries quietly building wealth, buying assets, and creating financial freedom. The difference isn't luck. It isn't talent. It's habits. Small financial decisions repeated over and over again that either build wealth or destroy it. And the scary part is most people don't even realize they're making these mistakes until years have passed, and they're trapped in a cycle they can't escape. In this video, we're going to break down 5 powerful mistakes that keep people poor for life, and how avoiding them could completely change your financial future. The first mistake is living to impress other people. This is one of the biggest wealth killers in modern America. Social media has created a culture where people feel pressure to look rich instead of becoming rich. People finance luxury cars they can't afford, buy designer clothes with credit cards, and upgrade their lifestyle every time their paycheck increases. They want the appearance of success without the foundation of financial stability. And the banks love it. Every swipe of a credit card, every high-interest loan, every monthly payment keeps people trapped longer. The average American carries thousands of dollars in credit card debt, often paying interest rates above 20%. That means even when they work harder and earn more money, a huge portion of their income disappears into interest payments. Wealthy people understand something different. Real wealth is often invisible. It's the paid-off house, the investment portfolio, the emergency fund, the Roth IRA, and the growing 401k balance. Millionaires don't always look rich. Sometimes they drive older cars, avoid unnecessary debt, and focus on buying assets instead of status symbols. The second mistake is relying on only one source of income. For decades, people were told that getting a good job would guarantee security. But today, layoffs happen everywhere. Entire industries change overnight because of AI, automation, or economic downturns. Depending on one paycheck is one of the riskiest financial positions you can be in. If that income disappears, everything else collapses with it. Rent, car payments, insurance, groceries, all of it becomes a crisis instantly. Wealthy people rarely rely on one stream of money. They build multiple income sources over time. That doesn't mean you need 5 businesses tomorrow. It can start small. Maybe it's investing in dividend stocks, building a side hustle online, freelancing, creating digital products, or learning skills that increase your earning power. The goal is simple. Never let your entire life depend on a single employer. Financial freedom doesn't happen when you earn more money once. It happens when money starts flowing from multiple directions, even while you sleep. The third mistake is ignoring investing because it feels complicated or risky. This is one of the most expensive financial mistakes a person can make, especially in America where retirement systems are heavily tied to investing. Many people leave money sitting in low-interest bank accounts while inflation quietly destroys its value every year. They're afraid of the stock market because they hear stories about crashes and losses. But what they don't realize is that not investing is often the bigger risk. The S&P 500 has historically grown over the long term despite recessions, crashes, and economic fear. Meanwhile, inflation continues eating away purchasing power year after year. Wealthy people understand the power of compound growth. They know money invested consistently over decades can become life-changing. Someone who invests even a few $100s every month into index funds inside a Roth IRA or 401k can potentially build hundreds of thousands, even millions, over time. The earlier you start, the fourth mistake is not understanding how credit works. In America, your FICO score quietly controls major parts of your life. It affects mortgage rates, car loans, apartment approvals, insurance premiums, and sometimes even job opportunities. Yet millions of people never learn how the system works. They max out credit cards, miss payments, close old accounts impulsively, and damage their financial reputation without realizing the long-term consequences. A poor credit score can cost tens of thousands of dollars over a lifetime through higher interest rates and denied opportunities. Wealthy people treat credit differently. They use it strategically, not emotionally. They pay bills on time, keep utilization low, maintain long credit history, and understand that good credit gives access to better financial opportunities. Credit is like a financial report card, and whether people like it or not, The system rewards those who understand the rules. Learning how credit works can literally save years of financial struggle. The fifth mistake is never learning financial education. Schools teach algebra, history, and science, but most people graduate without understanding taxes, investing, debt, budgeting, or how the IRS actually impacts their income. So people enter adulthood making huge financial decisions with almost no knowledge. They sign loans they don't fully understand. They buy liabilities thinking they're assets. They work for money forever without learning how money itself works. And the cost of financial ignorance is enormous. Wealthy people invest in financial education constantly. They read books, study markets, learn about taxes, understand business systems, and improve their money skills over time. Because once you understand money, you start seeing opportunities everywhere. You stop making emotional decisions and start making strategic ones. Financial education changes the way you think. And once your mindset changes, your actions change too. At the end of the day, staying poor usually isn't caused by one dramatic mistake. It's the result of small habits repeated for years. Overspending a little too often, avoiding investing for too long, ignoring financial education, depending on one paycheck, making emotional decisions with money. The good news is this also means wealth can start with small changes too. One smarter financial decision today can completely alter your future years from now. The people who build wealth aren't always smarter or luckier. They simply understand the rules of money earlier and play the game differently. So if you want a different financial future, start by avoiding these 5 mistakes. Because the decisions you make with money today are quietly creating the life you'll live tomorrow.